Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing, while also documenting their own personal investing journeys, are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, it's your boys, Corey and Ryan, here with another episode. It's Wednesday. You know the vibes. I'm feeling good.
He's feeling great.
Oh, let's ride. Yeah, I'm feeling good today, but we had a special guest.
He's definitely feeling good.
I'm feeling good, dude. I don't know why. Actually, because we just had an awesome episode.
That's why.
We actually had on special guest Sam Primm of FasterFreedom. So you guys probably have seen him either on YouTube, TikTok, Instagram. Dude's got
2.1 million followers across all platforms. So 1.7 on TikTok, like over 250 or around 250 on Instagram, and then he's got like 85,000 subs on YouTube. He's crushing it.
And he knows what he's doing. So he's a real estate investor out of St. Louis, Missouri. He has a portfolio of over $40 million that comprised of 274 units that brings in over $275,000 a month in rental income. He's absolutely killing it. He's 35. He started investing at age 26. He and a partner from growing up, they tag team their businesses. One handles the flipping business and Sam handles the educational branch. And these guys are just churning and burning real estate deals, networking. They built their companies, have 20 to 30 employees in each of them, and they're scaling quickly, but it's also they're giving back. I love his content. It's just super unique to like the average Joe, teaching you how to invest in real estate, whether you have a W-2 job, whether you don't, whether you want to scale up. He talks to everyone.
Sam prides himself on being a normal dude. Like that's like his whole thing. He's just a normal guy. And by the way, we didn't even mention that he doesn't use any of his own money, zero of his own dollars. And he's scaled a portfolio that is worth $42 million. And he's like talking about how he's in $25 million worth of debt, which leaves you $17 million of net worth in there between him and his partner. It's just like he understands how to leverage debt. He understands how to use other people's money. He gives them a great return. He's kind of mastered the Burr method. He goes through a specific property here at 12 unit. He talks about exactly how he broke it down and how he made $500,000. Then, took the private money lender out of the deal by giving him his money back in his return. It's just, he's got the whole system down and he is able to explain it so concisely for people that are just getting started to understand how they could potentially do it themselves. And yes, people are still burring in 2023. Sam's doing it and he's doing it really well. I think, anything else? Should we just bring this guy in?
I don't know. Yeah. Let's just bring Sam in. Let him tell a story.
Let's do it.
Sam, officially welcome to the Weekly Juice Podcast. Corey and I are so excited to have you on the show, man. We've been following your journey on social media for a while now, and you're absolutely killing it in the real estate investing game. So we're hoping that you'll bring drop some wisdom and some bombs on our listeners today. But thanks for joining us. We're excited.
Yeah, no, I'm excited to be on. I appreciate you guys taking the time out and having me on.
Absolutely. So can you walk us through the inception of your real estate journey, like how you became a real estate investor, maybe what you did before, and then when the light bulb clicked on in your head, you're like, whoa, I need to go full-time investor?
Yeah, for sure. So my story isn't some, crazy rags to riches story where, I grew up, crazy, poor and, had to fight my way through this and couldn't pay bills or anything like that. So for a while, I kind of was like, well, my story's nothing special. But then, to jump ahead before I jump backwards, I had the realization that that's perfect. That's where most people are. I know everyone struggles, but most people are normal like me. Grew up normal, middle class, lower middle class, didn't have a ton, but didn't really want for anything. And, just had a job and looking for more. So that was kind of when I had that light bulb moment of my ordinary normal story is a perfect story for most people because not that many people grew up in hut like my buddy Kong did or anything like that. So flash backwards to my real estate investing journey. So, I did, like I said, normal high school, college, had a job out of college, got married, and that was fine. My job was fine. I was enjoying it okay, but I wanted to do more. I think it had to do with maybe playing sports growing up and have that competitive drive nonstop for 15 years and then that going away. And then your job's your job. And, if you're not getting pushed on it, where does that competitive juices go? So me and my buddy Lucas, who had been my friend for 20 years, had decided to start investing in real estate on the side while we each had full-time jobs. And we did that. started to build up a rental portfolio, started to see the power of real estate, started to make connections, and started to see like we could maybe do this full time, not really knowing exactly what that would turn into. And then, we started investing in 2015-ish, quit our jobs in 2018, and it's pretty much been gangbusters since then. I'm sure we'll get into the finer details, but I think for your audience and for everybody, it's kind of, I walked that path from real estate being a side hustle to it being my full-time job, to being financially free and having multiple businesses. I think that's a path that a lot of people want to walk. And I have walked and I'm walking it. So it does provide me a lot of really good insight to give out on social media, as you guys talked about earlier.
Yeah, couldn't agree more, honestly. And it's funny that you mentioned this. A lot of people are walking that same path. We're on the same trajectory, to be honest with you. We still have our W-2 jobs. We're building up our portfolio, but we got our hands in a bunch of different things at the moment. But I'm wondering what advice you have for people that are looking to scale that and say, hey, I know I have my real estate on the side, but how do I get that to take over full time? And like a lot of people are like, all right, so you make a 6-figure salary. Do you have to match that 6-figure salary in real estate cash flow in order to be able to leave that job? Just curious, everyone has a different take on it. I'm wondering what you and your partner kind of came to the realization or whatever the numbers or metrics were for you guys to be like, okay, we can do this full time and we can move on.
Yeah. So for a while, that was our goal, was buy enough rentals to create passive income to quit our jobs. And at the time, Lucas was making, I think, like 65 grand. So we were like, how many rentals do we have to buy to live off the cash flow? And then that was kind of our mindset for probably a year and a half. And then we started to realize, man, that's a stress on that business that's going to take forever with how we buy real estate, because we don't use any of our own money. We're not putting cash down, and it was just going to be a lot. So something I realized, and I'm sure you guys already know this, talking a little bit earlier about your guys' businesses, but it's really important to have, active income and passive income. I still have yet to touch any of my rental income. We made that decision a year in to, not live off of the income from our cash flow of our rentals, and to get that active income, which in real estate, you have so many options. So we chose the wholesale and the fix and flip route. So get that active income, replace your W-2 income with, actually wholesaling and doing out an active income with flips. And that took me a while. I quit my job in 2018. I didn't make as much money as I made at my W-2 job until 2020. So I took a little bit of a step backwards, nothing major. So I think the advice would be, make sure you have a good stream of active and passive. I think it's really risky to live off of just cash flow, because things could happen. A water heater could go out. We had an apartment complex flood this month or this year earlier, cost us 150 grand. Things like that happen. Save your cash flow for that. So active and passive is important. And then, just making sure you have all the right connections and jump at the right time. I'm not one of those people that say, go all in, quit your job, you'll figure it out. Screw that. I don't know if I can cuss on this podcast or not, but F that. I was, it was something where we had 25 rentals. We had a couple wholesales in the pipeline. We had 2 flips we were working on, and we had some deals under contract. And I was like, all right, now's the time. I'm going to start going to go all in and quit. So we had everything kind of lined up before we did it with the active and passive income. So that would be my advice for, whoever, but obviously, everybody has their own kind of way to do it.
Yeah. Well, I mean, I want to touch on that too, because I want to go back to what you just said. You're coming from a place of, you have over 274 rentals. And I just shared this on social media the other day, that you bring in $275,000 a month in income. That's not cash flow, but that's income. So, you can do some math to figure out where that cash flow is. Some would say like a third of it or whatever. But even if you're the one saying, okay, I still don't live off, I have this big of a portfolio and I still don't live off my cash flow, that changed our minds in the last couple of years. We're like, okay, we need like 30 rentals. And I'm like, if we're bringing in $10,000 a month in cash flow, even like, dude, we just had to replace floors for $8,000. Like it just, I realize that it's going to take so much longer, the long-term rental route to get to that point. I totally agree with you on the active income. And then that's kind of why we still have our W-2 jobs. Like we have W-2, we're making money through our podcast, through social media, and then some other ventures that go along with it. But the active income is extremely important. And did you want to touch on the wholesaling aspect of that too?
So it's interesting, Sam. I think you're a couple of stages beyond Corey and myself in our journey here. And it's great because you have a partner too. So you could probably talk to us. We've been approached by people for us, like so many different options. And like, you guys would be good at this. This is how to increase your active income. And one of those things specifically is wholesaling, right? So a lot of people have mentioned to us, like, hey guys, you can either you can become agents or not, but also start getting into wholesaling. You're going to have more deals across your plate. You'll keep some, you'll pass some on. I'm wondering if you guys started wholesaling while you still had your W-2 jobs, or if you waited until you left to begin doing that to boost your active income. And the reason I'm asking this is we're toting that line is like, hey, I have a kid coming up, to be candid, and then like our stages of lives are getting they're getting crammed. I'm wondering if I can leave my W-2 job and have time to cold call people, dude, when I get home. And
You
so
mean like after
my W-2, and it's like, where am I going to fit that in? I believe we'd be really good at it because we're both in sales anyways. However, I'm just wondering how that fit into your schedule, and if you even think that's possible for people to do while they have their W-2, or if it's something they should go all in once they're out of that W-2.
Yeah, that's a great question. I think there's a ton of different ways to wholesale. You can cold call, like you said, which if you guys have phone skills, that's a great way to do it. You can text, you can, hire things out. You can maybe put a little bit of your money aside to hire out a company to do those things for you. You can just network. We bought my flipping company, which is mostly wholesaling. But when I say flipping, I just mean buying and selling. We bought about 310 houses last year, and 250 of them came from $0 in marketing spend. We only bought 60 with our marketing spend because, out there, our buyers were out there networking. We have 5 full-time buyers, but they're out there networking. They're talking with other wholesalers. They're talking with real estate agents. Send me your pocket distressed listings. If you need something to close quick in cash, give us a call, or, just talking to, insurance agents, or we buy houses from a bowling alley owner who, talks with his bowling alley people as they're drinking and something happens in their life, or there's somebody they know's lives and they bring. So they're just getting your name out there and talking and just trying to find distressed properties and then getting them under contract for, whatever you can, and then figuring out the best exit strategy. Should we wholesale it? Should we keep it as a rental? Should we flip it? Just finding those super distressed properties at good prices. And then you guys get to choose which pipeline you send it down. Does it make sense to just wholesale this one, make 15 grand? Does it make sense to keep it? Should we put 30 grand into it and try to make 50 grand on a flip? So it just kind of gives you more options. So I think just trying to find distressed properties and then figuring out which exit strategy is best for that distressed property. You don't have to spend, hours and hours cold calling. You can send direct mail or hire some of that out if you want. There's a lot of different ways to come across distressed properties.
Got it. Cool. So I'm curious what market you focus on and what your main focus is right now. So sounds like you're doing all of it, but to amass 275 rentals, you got to really put some work in. So are you just consider yourself just an overall real estate investor and you figure it out after you get the deal and you know what to do with it? And then also, what markets do you play in the most and why do you like those?
Yeah, so we're only in St. Louis. That's where all my rentals are, all my flips are, all my wholesales are. It's just my backyard. It's where I grew up. It's where my business partner Lucas grew up. So we know this market really well. And it's it's not a huge city, but it's big enough that, there's plenty of deals out there for us to continue to grow all of our companies. So we just focus here. I would suggest your backyard if possible. If you're in downtown San Francisco, yeah, it's going to be tough bursing a single family rental out there. I get that. But if it's possible in your backyard, I think that's the best, because there's these hedge funds and these big players in the game, and they buy houses and they sit on them and they're just looking at numbers and trying to figure it out at a 30,000 foot view. And when you live there, it's like you have insider trading. What's going on in what areas and what areas are up and coming and which aren't. And they don't know that. They're just looking at data. They do not have that many boots on the ground. And they just buy, and then their quota gets filled and then they move on. So I'd say in your backyard if possible. But then as far as, actually what, areas we focus on, I would say, for a while there, we were just kind of buying whatever. And, Luke's and I making the decisions, but now we've grown companies. We have about 35 employees right now. So we have a few different companies that we have. Our flipping company is the biggest. There's, 23 employees. And then we have property management company, and then my education company, FasterFreedom. So we have about 35 employees. So the team, we have a team. I haven't even seen this is, you could look at this as good or bad, guys. I haven't even been inside my last 30 single family rental houses. I couldn't tell you one property we bought last year of those 310 houses. That's not my side. Lucas handles kind of the flipping side and I handle the education side. He couldn't tell you one thing about our students that we have. So it's one of those things where you guys will get there. If you're not, it's almost a divide and conquer thing. And, 1 + 1 doesn't equal 2. 1 + 1 equals fucking 100 for us. Once we can divide and conquer and hire the right team and have the right people managing the things for us and just trusting them to make the decisions, and they make a mistake, not the end of the world. We'll move on.
So let's talk about that. Growing your first business. I don't know if you did them in tandem, whether it was the education and the flipping one first. Can you talk to how you were able to I guess, divide and conquer, but then also remove yourself from the business a little bit and put the right people in the right chairs, just because I think for us, that's going to be the most important thing coming up here in the next year and a half on scaling and getting to the next level, and then freeing us up to maybe explore other options. So curious on how you guys put that into play.
Yeah, for sure. Because I think that's huge, especially the other option part, because we just started an investing company that's going to invest and buy companies outside of the real estate space just to diversify. And once you get the groundwork laid out, you can really do it in any type of industry. And the biggest thing for you guys, I think, if you're not familiar with it, is the book Traction. If you guys are familiar with that,
yeah, the EOS.
I haven't read it, but I heard it's amazing.
That's how we operate our entire company. I mean, that is a way for you guys to follow a plan that says in 5 years you want to be here. All right, that's it. Like, just a quick little rundown. It's like, my 5-year goal is to have FasterFreedom be a top 5 real estate investing education company in the whole country. Rich Dad, Poor Dad, Grant Card, all those people, FasterFreedom right there. That's it. That's my 5-year plan. Then you lay out a 3-year, like, kind of how you do that. And then a 1-year plan. And then you go it down to quarterly, to monthly, to weekly, to daily. And then there's meetings and agendas for meetings and level 10 meetings where you have, like, to-dos. And it just basically, most small companies, there's not like shareholders and stakeholders and people and CEOs that have 30 years of experience. How do you know what to do besides just hop on the phone and try to figure it out? If you structure everything through Traction or some other type of operating system, your business gets an operating system, and then you treat it more like a business. Things get organized. People have accountability. People have goals. You reach them, you don't. You push them off to the next quarter. Whatever it is, it just allows you to treat your business like a business. And that's what we did about 3 years ago. And that's when things really scaled. We kind of did them at tandem. The flipping company we started first. We've been always growing our rentals. Education, I just started 2 years ago, 2.5 years ago now. So that was a little bit later on. But we ran things the same way. Every single company has the same, we have quarterly meetings, we have weekly meetings, we have yearly retreats. They're all treated the same, kind of, just even though the industries are similar, but a little bit different.
Wow. I love that. Can you, I know you said you're a little bit out of the flipping one now, and your focus is the education, but can you talk us through the structures of both businesses a little bit? And you don't have to break it down, the EOS to a T, but I'm just thinking of starting out on the wholesale side, on the flipping side here. It's like, how did you know when to put someone into a certain position and say, hey, this is our first hire, we need to move to this person? Was it when you accumulated a certain amount of wealth or these properties in there? And I'm just wondering, like, the flow of that and how, I think you said you have 32 people in that company or something like that in the 20s or 30s. So I'm just curious of how you even got up to that number, and if they're internal or VAs, or if they are people like within the United States.
Yeah, no, they're all people in our office. So we recently bought about, I guess, a little over a year ago, an office building, and have the entire inside. Now we have a building that we're all together in, because we were kind of spread out before. But we started it, basically how we did it was, so Lucas was like we were both the COOs, dual COOs, and he was like the CEO, and he was like the COO. So he was like the operations guy, and I was the marketing guy. And we did a lot of that work in that company. I helped him run that for a couple of years. And as we did it, we just hired people as we needed. It was almost one of those things where we're doing too much, we're pulling our hairs out. Okay, let's hire somebody to help take something off of our plates. All right, now I'm pulling my hair out, I need to hire a marketing guy. All right, now I'm pulling my hair out, we need to hire another sales guy. So we just there wasn't an exact structure to it. We just grew it as we saw the needs fit and as the income came in, because our goal is to own $1 billion in real estate and bring an NBA franchise to St. Louis. So our goals are ginormous. We're not worried about maximizing every little detail and not hiring and having crazy high margins. Our goal is to grow freaking companies, and over time, with the right people in place, we can grow those margins over time. So our goal wasn't always to, hire exactly when it's needed. It's like, let's hire it and we'll figure it out after the fact. That's kind of how we run everything. So for that company, we just kind of hired things out. And then Lucas came to a point where he's like, I'm doing way too much in this business. So we hired a COO, somebody to basically run. So he has one person report to him, and then all the other managers report to the COO. So just slowly over time, as income allowed for it, and as the market kind of, we saw opportunity, I guess is the best way to say it.
How did you come up with the goal to want to bring an NBA franchise to St. Louis? I think that's so cool. And I'm just wondering, like, if you have a background story on that one?
A little bit. So we We made too little of goals for the longest time. It was one house a year for 10 years was our original goal. And then it was something else. Then it was something else. Then it was 25 million in real estate by 2025. And, last year we hit the 40 million mark and we're like, okay, let's stop making these freaking goals that seem big, but let's shoot for something crazy. And we, like St. Louis is not the most exciting city, but we grew up here. We're always going to be here. Our businesses are always going to be here, even if we're traveling around and doing some crazy things. So we're like, all right, let's get a jet so that we can fly around and buy, bigger deals around the country. And then we started thinking, what would be most impactful for St. Louis? If we brought an NBA team to St. Louis, that would mean we made a lot of freaking money. We made a lot of inroads in St. Louis. The NBA is not going to pick St. Louis over a lot of cities currently. We would have to obviously create impact and do a lot to make a ton of connections in government and in business and make St. Louis a more desirable city. It would provide a ton of jobs in St. Louis. And I think with social media, I think I'll be able to potentially, when that time comes in 10 or 15 years, I will have, hopefully ton more followers than I have now. I think I'll be able to raise money to buy the freaking team. I think I'll be like Luke's and I, 51% owners. Let's do a capital raise like you guys are doing for the other 49%. And, for 250 grand, you get, a 0.001% ownership in the team. And it's an investment, not like the Packers. It's an actual investment you make money on. And that way I think I could raise a lot of money pretty quickly. So it just kind of, it's a culmination of social media, of impact, of helping St. Louis. It's just a crazy goal that obviously is a very low likelihood of happening, but hey, crazier shit's happen.
Crazier shit's definitely happened. I love that. We actually had a struggle this year, like trying to create our goals. We hit all of our goals last year, and I don't even know. Like, it's cool. We kind of pat ourselves on the back, but it's almost like I think we hit them because we set too low of goals, like that. And that's doesn't mean we weren't proud, but I'm like, it's a difficult thing to figure out. Like, okay, where do I shoot? How high do I shoot? But so I mean, you can't go much higher than an NBA franchise unless you're going to put yourself on the moon or something. So I think that's awesome. We're both sports guys, so I think it's pretty cool.
Yeah, I love that, man. Kind of want to parlay this into, you mentioned marketing, and my ears are ringing because that's what we're kind of searching for a little bit here, and like kind of have some holes in certain sides of the business. But I want to talk the education business now too, and if you could walk us through that, and why the inception of it, how that flows, as opposed to the flipping side of the business, and then also, can you talk to if you hired a marketing agency? Like, your website, dude, is phenomenal. Your social is phenomenal. Like you got it all rocking and going on. And I think there's some points that Corey and I chat, and we're like, we might need a rebrand. Like, it's called Weekly Juice. Like, it's cool to start, but no one knows it's about real estate investing and entrepreneurship and building businesses, and et cetera. So we're at this point where we have this following of like 25,000 people and a certain amount of downloads for our podcast. We're like, damn. Like, should we potentially rebrand this thing? Should we hire a digital marketing agency to come in and help us out? Then we have a couple other businesses, and like, how do those flow in? We think of Ryan Pineda, right? He has like the Wealthy Way, and everything flows down. So, you're well on your way, and I love what you're doing on your marketing side. So I'm wondering if you could talk to the structure of the educational business, and then the marketing side too, maybe tips and tricks for us.
Yeah, for sure. No, I mean, I think it's good to build that brand. So, Ryan, I'm in a mastermind with him and know him pretty well. I know he kind of had several brands, and I have, I purposely created it's the FasterFreedom brand, but on social media, I'm saying FasterFreedom because it's a lot easier to build a brand around a person so they can connect. So I try to play the best of both worlds, my name and FasterFreedom in there. Eventually, hopefully have other people, be Jim FasterFreedom or all these other people to help build that brand. And then it'll all roll up to the FasterFreedom brand. But how it started was, Luce and I just started posting on Facebook about some things we were doing. We were trying to actually help garner some attention for our local meetup. We have a local meetup for our flipping company that just, brings people together and helps, the community and help people connect. And we started posting, and, we were talking about, I think, a 12-unit apartment we were buying and how we did it and the numbers, and everybody was just messaging us like crazy. We talked about it at the meetup, and we just got nonstop attention. Like, you should do this more. So we decided to do that. We both started posting more and kind of made it a company. And then we decided for me to take it on and him to take on the flipping team, because at the time I was still running the flipping company with him. And it's just been quite a journey. I started it getting on social media in 2020. 2020 was slow going and didn't make very much money. 2021, the same thing. It's hard to get a foothold in the education social media space. It takes time, energy, effort. You have to either hire a lot out or be a psychopath like me and just be on it nonstop. Luckily, I had the luxury of the flipping company to take care of my active income, right? I could spend 20, 25 hours a week on social media for 2 years straight. And that's crazy, and analyzing videos and making videos. And so I did all of that pretty much myself. And it was a slow growth. And then eventually it was not slow, but it's built around me. It's built around my brand, me being just a normal dude. I don't have like a Ryan Spit talk about him. Each video he makes are like movies. They're ridiculously, he looks like a freaking Filipino Ken doll. And then he's got his, his everything and the editing and the amount and the effort and the money he puts into his social media. That's fine. But I have like 400,000 more followers than him, and I did it all with my phone. So it's not about production quality. It's not about that. It's about you generating, just actionable and authentic content. Like I have like 2.1 million followers, and it's been basically all from my phone. I'm starting to hire things out right now, but Ryan's been hiring it out for 2 years, which is smarter. Probably his play, I guess, because he hasn't spent 30 hours a week on social media. He's probably spent 5. So maybe his way he did it is better, but everybody has their own different path, I guess. For a while, I was trying to be like Ryan or these other people. And the minute I was just like, I'm going to do me, things really seem to take off. So I don't think there's a right or wrong way to do it, as long as you're, doing stuff that you want to do. And, I think Ryan puts out like 5 videos a day, literally, and I put out maybe 1. So it just kind of depends on what your appetite is.
Yeah. And if you want to look at like the king of podcasting, which would be like Joe Rogan, he talks about how he just loves to do it, and he just does it his way. And he has more downloads than anybody, Fox, CNN, no matter what. He's like a news source now. Like that's how big he's gotten. So it's like, and I was listening to him the other day because I'm trying to improve our podcast. And he's like, I just do stuff that I like, and people find authenticity welcoming. Right. And they're like, if this person just trying to be them, they're not trying to be somebody that they're not. I also want to be me, right? It's that kind of thing. And like, obviously at massive scale, but I love that. I think that strategy is the way to go. I'd like to go ahead, right? Yeah.
So on that, first of all, so I guess 2.1 on TikTok, and then you're over a couple 100,000, I think, on Instagram as well. Is that?
No, so 2.1 total. So, with TikTok and Instagram and all that. So yeah, a little over 2.1 total in TikTok, YouTube, and Instagram. Yeah.
That's amazing.
Yeah.
And so you started all these in 2020. Is that correct? That's incredible, man.
Yeah.
That's freaking insane.
Yeah.
It's amazing.
You want a tip for your guys' podcast? Not that you're asking.
For sure. Yeah.
Rap. So Lucas and I just started a podcast. We're on our 50th episode dropped today, and Lucas promised that he would rap on our 50th episode because he didn't know if we'd get there. So it's the one piece of content that we do together, and it dropped today. And Lucas rapped a 3-minute rap on the podcast about real estate. So there's my tongue-in-cheek joking advice for you. Get into the rap game.
All right, cool.
Okay. Yeah, I don't know if it's going to help us, but we can try it.
Yeah. You can do
you mentioned, I know we're jumping around a little bit here, but I want to talk about, you're clearly an expert on the real estate investing side, and now becoming even as much of an expert, if not more, in the education. But you mentioned that 12 unit. I want you, if you could pull out a deal, because I'm really curious about the St. Louis market and what you're looking for. If you could pick a deal and then maybe just kind of walk us through, like, break it down, how you got it, what it cash flows, maybe what you purchased for. I don't know if even if you use round numbers. I think it's just really cool to find new deals and new areas and see what other investors are doing as it relates to what we would be looking for.
For sure. Yeah, we can just break that 12 unit down because it's, a little bit bigger of a deal than like a single family, but we're not talking a 60 unit that's scary, right? That a lot of people think they can't handle. So the 12 unit, we bought it in 2018. It was listed on the MLS. It's kind of on an outskirt. It's about 45 minutes from St. Louis. It's kind of like on the outskirts of, a suburb of St. Louis. St. Louis isn't a huge market or anything like that, but we found it. It was listed. It was listed on the MLS, I think, for $750,000. And I saw it drop to 625 or 725. Apologize. So it dropped 25 grand. So it kind of caught our attention. And then I was like, let's give this one a shot. We got the private money for it. I'll get into the numbers in a second. And ended up negotiating. Lucas said, get it below 700. He's kind of the numbers guy. I'm like the negotiation sales guy, marketing guy. And I got it. I was excited. I got it for 682. So we got it for $682,000. We put 20% down. We used a private lender for that 20% down, and the bank did the 80%. So I don't have the exact math on that, but what is that? $50,000 or something like that, private
Yep,
lender.
something
Then
like
the rest was from the bank. And then it was a little bit low on rent, didn't need a ton of work. So over the next 2 years, we just raised the rent as leases came up, or as people moved out, and made minor repairs through cash flow. So, throughout that time, we were paying our private lender from cash flow. I believe it was 8% on his money annualized from cash flow. And then we were repairing the units and raising rent. We were cash flowing a little bit probably, but not a ton. But 2 years later, the property appraised for 1.1 million. So, we went from 682 to 1.1 million with none of our own money. So that was, not quite 500 grand equity increase. So what did we do? We took a chunk of that 500 grand to out in a refinance and paid back our private lender his 150, whatever, plus, probably 20 or 30 extra grand to get him to a 12% return. Then we pocketed probably 150 grand of tax-free money that we just put in, in the account for a rainy day. And we own the property, outright, just us two with no private lender, just a bank note. And, by that time we had negotiations with banks and got better terms. So it's almost a long-term BRRRR deal is how we do it. Find a distressed asset that you can either repair or raise rents to increase the value. Then over time, the value increases enough that you take a chunk of that and pay who you borrowed the money back from. So that's an example. We've done that 6 times now with 6 different apartment complexes. And that's just kind of a simple kind of mid-level one.
I thank you for breaking that down. That's perfect. And for you able to, make $500,000, like it's in a couple of years, like good luck doing that in a lot of businesses, right? I mean, it's amazing. My question that I have for you, it's a little bit of a selfish one. I'm curious about your thoughts on return on equity and when you feel like it's a good time to sell properties or trade up, so to speak. And I can give you the reason why I'm asking. So I bought a property in 2020, just a duplex. I bought it. You call it $125,000. It's probably worth $235 today. And there's a point in time where I'm like 200, 300, 400, even if it's $400 a month in cash flow, I'm like, I have 140 grand in the property, right? So if I calculate my return on equity, it's just so low. I'm like, it probably makes sense. I always thought I was going to hold on to properties forever, right? Pay down the loan, do the standard thing, raise rents over time. And I can still win that way. I'm not losing money, but I'm curious, do you have a metric that tells you, oh no, if the cash flow, if you get a 4 times return on your initial investment, then you're getting out of it. Is there something that you look at in terms of when to sell, refi, 1031, et cetera?
Yes and no. So it's not really based on money in the deal because we use other people's money. Those 275 units you talked about, didn't use any of my own money. Had I used my own money, I might have a little bit of a metric. But what we kind of do is there's no point. Well, there's a point, but there's not really a point if you're looking to scale and grow. Maybe not a billion in real estate. I get that we're nut jobs, but if you're wanting to grow and do, maybe 50 units, 100 units, 10, 20 million, something, a decent number, it does you no good to have $500,000 in $1 million building. That's 500 grand of dead equity, I call it. So what I know a lot of people do is they'll either get it to 80% or 0. I'm going to refinance, the several units I have and bring them up to 80%, pull out enough cash to pay off several properties. So then, you're either at 80 or 0 because you're using that equity. Now, of course, you can have lines of credit against and collateralize it, but that's a little bit much. So that's what a lot of people do is they'll, and we've done that. We have, almost 2 million in paid off properties now that we then have lines of credit that we then lend out to our companies and other people to, kind of arbitrage and make a little bit of money. But I would think, it would depend on your goals, how big you want to grow. But, I agree with your point is, there's a certain point where, it's just kind of sitting there and your equity's growing, but it's not really doing anything for you. It's increasing your net worth, but, that's just on paper. So I would think at some point it would either make sense to cash out or line of credit or, pay it down to 0 and then borrow against it and bring up another property to that 80%. So kind of not exactly what you asked, but kind of generally how I look at it.
No, I think it's great advice. And I think either way, the fact that if you're in that scenario, you're in a win-win, right? I mean, there's not that many ways that you can lose in that scenario if rents keep going up. And I have such a spread that I'm not really worried about a market correction that much. I just will hold on to it. I won't sell it. It's fine, whatever. So I appreciate the insight. And most investors that are at the stage that you've gotten to have said, yeah, get rid of that thing and trade it up, or if you can. So it's good stuff. Yeah.
So you've mentioned this a couple of times, but using other people's money, I mean, to use none of your own dollars to get into 274 units, pretty incredible. Can you talk to that strategy and how people that are listening can do this, right? They're probably thinking, oh, I remember when we first started, like, all right, we got to save 50, 60 grand each. Then we can put a down payment on a property and then rinse and repeat over and over and over. It's just pain in the ass, right? You have to go back to work to get that cash. So can you talk to some strategies of the multiple ways people can use other people's money to get into deals and scale their portfolios?
Yeah, for sure. So that was my initial strategy too, was putting 20% down on rental properties. That's what I thought you had to do. We bought our very first rental that we still own today. We bought with the plans to fix it up and sell it and, take the profit and put 20% down on the rental. So I thought every rental I had to buy a flip to pay for it because I didn't have enough cash at the time to put 20% down on anything. So that was the original plan. That's how most people view it. But you got to understand debt. You got to be comfortable with debt, and you got to leverage it properly. Of course, getting into debt can be scary if you're doing it the wrong way. But I think the biggest thing is understanding debt and the power of debt and being okay with it. I am in $25 million in debt, but it owns $42 million in real estate. It cost me 125 grand in mortgages, but it brings in 287 grand a month in rent. So if you can see the half glass full along with the half glass empty side, if you can see the equity and cash flow side and not just the debt side, I think that's very important for people to realize that Dave Ramsey teaches you how to not be poor. He doesn't teach you how to be wealthy. He teaches you how to not be poor by not getting into debt. That's a great way to not be poor. But if you want to create wealth, you're going to have to leverage debt. That's what Elon Musk bought Twitter. Whether you think what he's doing with this right or wrong, he didn't write a $44 billion check. He borrowed against his Tesla stocks. Bank of America gave him a shit ton of money. He borrowed money from private investors. Mark Zuckerberg created Facebook and blew it up with Peter Thiel's money, that 500. So this is what these ultra billionaires do, is they borrow money to buy an asset that produces cash and grows in value. You take the cash that asset produces, you pay who you borrowed the money from, you own the asset. I'm not smart as those guys, so I just did it with real estate. You can do it from houses to apartments. So what I did, all of that to say, it's the BRRRR method. You buy, rehab, rent, refinance, and then scale from there. So you're buying a distressed property, somebody else's money, and then you're creating enough equity that you can pay them back, and then you own the asset. So you're backing into putting 20% down rather than doing it in cash. You do it in smart purchasing and equity and improvements. You're just not using your own money to do that.
So I think
banks don't give a shit about your 20% down cash. They just don't want to take back the property. So whether you $100,000 property, whether you put 20% down on it or you owe 80,000 on it, they don't care. They're just going to give you an 80 grand check or give you an 80 grand mortgage, whether you put 20 grand down to get that 20% equity or just brought them a mortgage that you only owe 80 on.
Cool. I think thank you for that, by the way. I think the next stage in that too is talking about the BRRRR method too. And for a lot of people that have W-2 jobs, it's their biggest concern is how do I find these deals that are distressed, but that also have an opportunity that when they're renovated, they're actually going to appraise for the right value. And then B, how the hell am I going to do the work? Or how am I going to hire a contractor? I got to go 9 to 5. I'm sitting in the office. I can't go manage a construction crew. So I'm wondering if you could talk to that and like how you guys kind of navigated that in the beginning, because we did a BRRRR deal, but we ended up keeping it. We didn't refinance. It didn't appraise for as high as we want. We didn't pull anything out. So we still have the property. We love it, but we were there after work. We kind of DIY'd the whole rehab process. We hired a contractor that wasn't commercial by any means and wasn't like super fast. He was just like there. He's like, what do you guys think? And we were kind of doing it with him. He was doing the work, but we were kind of coaching, navigating along the way. But that was our first thing. We're like, dude, we don't want to do that again. That was brutal. It's a great deal, phenomenal deal, but we're like, that sucked. We don't want to do that again. So I don't know if you can talk to that, if you have any experience on that side.
For sure. So we did the same thing at first. Evenings, 10 hours a weekend, 15 hours a weekend, going there, driving to the properties, doing the work yourself, managing contractors, hiring people that half-ass the job or don't show up. We've been through all of that. I think eventually, if you keep going, you get to the point where, you've done 10 of them and you've got a good roofer now, you've got a good flooring guy, you've got a good painter, you've got a good finish carpenter. You just trial and error for the first handful of deals, and you treat the people that do a good job and, did it for a fair price, and, you don't have to babysit, you treat them well and reuse them and pay them on time. And then eventually it kind of becomes a little less tedious, but it does take time. And one of the things that we did probably on our first flip on maybe our fourth or fifth property, we hired a contractor / project manager, and we just baked that into the deal. I don't remember the numbers at all, but for simple math, we bought it for 75. It needed, $40,000 worth of work, but we borrowed, an extra 10 grand that we could pay from a private lender. He didn't care, that he's a private lender. He just wants to get his money back and trust us in the process. And we just paid a guy to manage the project for us. And at the end, we ended up selling it. And I don't remember what we made on it, 25, 30 grand, nothing crazy. It was a flip, but we could have made a little bit more, but I think that was the first taste of hiring people out and being able to scale and not spend every weekend on a property and still make 30 grand, rather than make 40 grand and spend every freaking hour outside of our jobs on there. So I think that's kind of part of it. There's no magic wand to do, but I think it's just connecting with the right people, treating the contractors right. Going to your local meetups is huge. We met so many contractors and future employees actually at local meetups. So going to local meetups and connecting with people and investors. Most investors have helpful gene and a vain gene. So they want to help you and tell you how well they did, but they'll probably also give you some of their contractors they use as well.
Got it.
Great tips.
Yeah. Thank you. So as we wind down the show here, before we get to the last couple segments, I want to ask you, what was the best strategy that you used to find the best private money lenders, people that trusted you? Did you start out with friends and family, and then that parlayed into maybe bigger investors, or do you have a select few that you continue to go after? What was the best way for you to create relationships? I assume a lot of it was just from trial and error, but how did you find your way there?
Yeah, a lot of it was, just kind of friends of friends kind of thing at first. And it's just talking about real estate. I get so many people that say, I went through my phone and I don't know anybody that has any money. And it's like, well, you probably do A, and B, maybe somebody in your phone, maybe what's in their phone. Maybe they know somebody that has some money. So just kind of talking about real estate all the time, whether it be at the bar with buddies, playing softball, at a family function, at work, wherever it is, just talking about real estate, talking about you wanting to do real estate and kind of having a passion behind it. And people, especially with a little bit of money, they like to put money behind people with passion. It's something about people that, I see the passion in you. So, I'd love to invest with you. So it's looking at the right type of people. Most people think private lenders are people with tens of millions of dollars, or they're, Uncle Joe and the mob. It's usually just a working professional, usually in their 40s or 50s, that has made a little bit of money, got promoted, has, a 401k, has an IRA, is looking to diversify 50 grand, 75 grand, 100 grand, nothing crazy, just a smaller portion of their, $800,000 retirement fund, give you a 75 grand of it to, make a 12% that's backed by real estate, that they're listed as additional insured, that they have a, lien on the property until you pay them back, and all these kinds of things, and that you personally guarantee. So you're basically giving them almost like a savings account security, but it's a 12% return, not a 0.0006% return. So I think it's just knowing the avatar of a private lender, that it's vast, and it's not just these people that have $10 million cash sitting in the bank, and just talking about it. And then over time, you'll make a few connections, do a few deals, and then they're going to tell their friends about it, and they're going to tell their friends about it, because wealthy people hang around wealthy people. That's part of the reason why they're wealthy. So they have their friends that want to brag about the 12% return they made on this deal, or the 40 grand they made the year before on lending you money. And then it starts to grow, and money's not an issue anymore. And that's something that I've seen with my students, and I've seen with, other people in the space. It's very, very common. Sometimes it takes 3 months. Sometimes it takes, 15 months, but it will happen if you just keep going.
Yeah. It's funny. We're at the point where we have people with their hands out with the cash in hand, and they're like, hey,
we don't even have enough deals.
Where's the deal? Where's the deal? I'm ready to go. I know and trust you guys. I know you're in the real estate field. I know you had some XYZ on your show. I know you guys know your shit. You're backed by a lot of stuff. However, now we're at the point where we're trying to vet the best operators, right? We want to scale into the multifamily syndication space and large multifamily deals. And it's all right, well, we want to get the right deal if we're going to bring friends and families cash into it, and we're not operating the deal ourselves. That's the hard part. We're not going to be the boots on the grounds guys doing the bird deals. That's just not our forte at the moment. And so I guess we're kind of trying to vet other companies to say, hey, let's see your track record. What have you done? What will you continue to do? Because I have a pool of investors that want to jump in, and they'll dive into the deal for them. And, maybe we get into the deal, or however it's worked out on the back end. But for us, that's that's kind of where we're at the moment. We're like, damn, we have people that have cash, right? And they want to be in real estate, but how do we deploy that for them and feel comfortable doing that? So I don't know if you are in on that space on the capital raising side for outside of your deals. It seems like you guys are the operators as well. So that probably helps to keep everything in house.
Yeah, at this point we are, and we talked about the syndication route. We maybe will go that route eventually. Right now I like to own, all of the properties we have, own them 100% between Lucas and I. And, we talked to some syndicators and some guys that do what we do. And it seems like the syndicators are like, I wish all this crap I got to deal with. I wish I just, owned them outright. And then some of the guys we talked to, no, I want these big numbers. I want to syndicate. So I think there's no wrong way to go about it. It just kind of depends on what you want.
Yeah,
totally. Sure. Cool. So I want to talk about FasterFreedom and your real estate investing mentorship program. And I know that you have a lot of students in this. Can you just give people a background of, what the mentorship program is about, how it works, and maybe how they could get some value from it if they were to join?
Yeah. So I post a ton on social media. There's a reason that I have the 2 million followers. It's because I post actionable content. I get weekly messages from people saying, hey, I got my first deal, or I went to my first meetup, or, I did this because of what I watched on your YouTube, or, whatever, your podcast, whatever it may be. So the fact that I put out all that information and I was doing that, I didn't have a mentorship at first. I was doing a local, kind of like a mastermind local thing, and just growing the brand to grow the brand, because I knew that growing brand was a good thing to do. But it came out of necessity, almost a need. People are saying, I want coaching. I want one-on-one coaching. I want, to walk through deals. I want a community to bounce off of. And I'm not going to do much of a mentorship. If anybody's interested, they can, message me on Instagram. But it just basically came out of necessity. And just quickly, it's 6 weekly mentorship group calls. It's one-on-one coaching. It's a Facebook group of now 900 students that do deals and bounce stuff off each other on the daily basis. It's 350 videos I recorded that they can learn through every step of the process. It's all the resources that we utilize every single day to do our real estate business. And then everything's just, updated daily. So it's just, like a whole bunch of everything you'll ever need. It's like probably worth 10 times what I charge. So, and people are really starting to get action from it. We had a student I had coffee with yesterday, or on Friday. He's got 3 rental properties in his first 4 months. I mean, he's not like a billionaire, but that's pretty damn cool. So it's just kind of a next level type of support that you can't really get from social media, because they're too flashy and there's titties bouncing everywhere across social media that distract you. And B, there's, it's not structured like an actual mentorship, can structures with.
Yeah, dude, don't let us get in the vortex of social media, man. If you get in the wrong resources side of it, you're going to be, going down a rabbit hole. So we try to stay on the right side of it and see stuff like we love your content. So you're totally right on that one.
Yeah. So we talked about this earlier, and I remember I mentioned Ryan Pineda, right? And like how he funnels his businesses, and you're doing an excellent job of the same thing. I'm wondering if you can talk to joining masterminds and the power of putting yourself in rooms with people that are doing what you're looking to do or something similar, and just like are masterful at what they do. So we have not joined a mastermind yet and haven't invested in coaching ourselves, which I think we need. We need a business coach, straight up. We talk about it all the time. And so what do you recommend? What masterminds have you jumped into? And maybe when did you know it was the right time?
Yeah. So we spend probably about $100,000 a year on masterminds and like self-improvement and, sending our team to some coaching things. So I'm a huge proponent of it. I'm a lot of things, but I definitely am not, I'm not going to sugarcoat or not like practice what I preach. I teach coaching and charge for it. So I also pay for coaching and pay for it. So I'm in Collective Genius Mastermind. It's the main one I'm in. You have to do 100 deals a year to be in it. So there's like 250 members. All the major markets have 2 or 3 representation. There's a couple people out of Philly in it. And you go there and you learn from people that are doing things better than you, and literally telling you one thing to do, or one marketing channel, or one piece of direct mail that's crushing it for them. Literally, you go there and each member has to present on something that they're struggling with or something that they're crushing, and you learn from their struggles or you learn from what they're crushing. That's what it is. And then there's speakers brought in, Jocko Willick, and a lot of these big names come in and motivate you. So it's like their return is insane, because you get tactical things, but you also get mindset things and putting your family first things, and just it just makes you a better business owner. So and then we do other things, but I truly believe in it, and I think being around other people is naturally going to raise the bar for you, whether it be, you know, through osmosis, through connections, through keeping you, you know, on the straight and narrow certain times. So it's hugely important to me. And I don't know one like crazy successful person. I'll quantify that as, I don't know one multi-millionaire that is not a part of some type of coaching or life coach or mastermind or mentorship. I don't know one. They're probably out there, but I don't know one that doesn't pay to be around other successful people. It's part of the kind of game.
Huge advice. So thank you. Two-part question on this. One, how do you vet? There's a ton of these out there. How do you vet the right one for you? And then B, if you don't mind sharing, and it's fine if you don't, but which ones are you involved in? And are you in multiple at a time, or have you kind of got in and out?
Yeah, no, I'll share whatever. So how to vet them? I think usually most of the time I have seen they are, you know, someone that you know is in it. So they like, hey, this works for me, and you trust that person. So like anything else, it's vetting, you trust them, and so they bring you in. The other thing is just talking to the people inside of them, asking for referrals, asking for people that have, you know, been a part of it. And that's part of the brand. You know, people know, like, and trust you on social media, then they're gonna, you know, like and trust. A lot of these like masterminds have brands, not all of them. So that's part of it. And then the ones I'm involved in, Collective Genius is the one, the biggest one that I'm involved in. It's pretty expensive, and we meet 4 times a year. And, you know, so traveling and flying out and doing all that. So that's always good. And then we send a handful of our team members to Entree Leadership. Dave Ramsey, don't agree with his wealth building or debt tactics, but his Entree Leadership is, you know, being an entrepreneur and growing a business. That summit, we send, I think it's like $4,000, and we send like 10 or 50 people down there. So that costs a good chunk of money as well. So those are the 2 main ones we're in. Then there's some local, like, you know, life coaching things that we're in and things like that. But those are kind of the main ones. I've looked at joining some other ones, but I have a 8-month-old and a 6-year-old, and, you know, so I don't want to be traveling a ton, and I get asked to do a decent amount of like kind of like speaking things that I'm going to do a little bit of. So I wouldn't mind doing a couple more, but it's just, there's only so many hours in the day kind of thing.
Yeah,
sure.
Totally.
Cool.
So as we wind down the show here, we're going to move into the core 4, and we're just going to kind of rapid fire it. I know you have a hard stop here coming up, but we just get to know you a little more personally here. So do you have a favorite investing or business book that you would recommend to people that are either just getting started or, you know, that would help them on their journey that maybe has helped you?
Yeah, so obviously everybody's got the Rich Dad Poor Dad, and I got a book coming out in like a month and a half, so I would say that, but I'm not going to say that yet because it's not out yet. But kind of something that maybe, you know, a couple that maybe people don't hear every single time they're asked. I really enjoyed Eat That Frog. It's a book about doing like the hardest thing of the day first and getting it out of the way, and the psychology and just momentum you build. So that's been huge for me. Pitch Anything is good. It's about framing conversations and kind of just being not in control of the conversation, but just kind of, you know, being, not having something getting taken advantage of. Those are really good ones. Entree Leadership by Dave Ramsey is a good one. So what I like to do, and what we do in all of our companies, is we like usually read to like a book club. We read a chapter a week of a book, and we discuss it at the meeting, so we can all kind of learn these bigger picture books. Like a great one would be I can't think of it. Good to Great by Jim Collins is huge. But then I like to get my tactical things from podcasts like your guys's and YouTube channels. So I like the tactical, like groundwork stuff from social media, and then the bigger picture stuff from books.
Cool. Love that. I've been doing the same thing, and I notice it's funny. I'll read a book and I'll get all this information. It's great. And I like make a little outline, but then I actually get all I want to hear and all I needed in a podcast episode. They'll like dissect it. It's like, damn, I just did an hour and I got everything I needed in this whole book that it took me 4 hours to read, or whatever, how long it takes. Slow reader over here, if you can tell. But cool. We'll
At least
go
you can read, right? Your buddy.
Yeah. Audiobook guy over here.
Audiobook.
All right. Last 3, we'll go rapid fire to get you out of here. Second question of the core 4 is, if we gave you a check for $100,000 today, tax-free, just how would you invest it or spend it, where you're at currently in your journey, and why?
I would leverage it. I would keep it, and I would leverage it to borrow more money. More people are more likely to lend you money if you have cash in the bank.
Love it.
Cool.
Sam, question 3. What has been your biggest mistake in your investing journey, and how have you learned from it?
Biggest mistake, I would say, is I didn't get insurance on a self-storage building that we were building, and it blew over, and it cost us about $150,000.
Ooh,
so now I get insurance on the buildings that we're building.
There you go.
Dang.
Could use our $100,000. Still need 50 though. So last question in the core four is, Sam, what do you want your legacy to be? So what gets you out of bed every morning to do what you do, and kind of like, what's your why and what do you want to leave here before you go?
Yeah, my answer kind of used to be generational wealth, but now it's more generational impact. I want to create companies, create a culture, create a influence that impacts people for generations to come. Of course, that means money, but it also means companies. And in our company, we have, like I said, 35 employees. There's almost 600 rental units owned in that company. All of our employees are growing their own rental portfolios and just creating an impact when I'm long gone.
Very cool. And that also plays into earlier talking about the basketball arena and bringing a team to St. Louis. So absolutely love it. It seems like you thought this out. So I absolutely love it. All right. Last question of the show. We finally made it to the last drop. And this question is, Sam, if you could go back to your younger 18-year-old self and look, 18-year-old Sam in the mirror and give him some advice based on what you know about the world now and your experiences, what would you give him?
Well, first I'd say me and Luke got in a few bar fights in college. I'd avoid going into those bars. And then the second thing I would do is I'd say, I hate this answer, but that's what I would say. I'd say get started earlier. I started investing in real estate when I was 26. I'm 35 now. If I started when I was 21, 22, I think I'd be 2 or 3 times further along. So get started earlier and get around the right group of people, and it's inevitable. Just a matter of when, not if. Very cool.
Sam, absolute pleasure having you on the show today. If people loved what they heard, how can they reach out, network, potentially get some coaching from you? What's the best avenue for you?
Yeah, I would say just Instagram is probably the best way. Just message me on Instagram, slide into those old DMs at Sam FasterFreedom. I'm on all the social media platforms. So if you have a preferable one, just follow me there. Put out a lot of content. And then the FasterFreedom Show is the podcast that we launched about 3-4 months ago that's having been a lot of fun. So you can check me out there as well.
Amazing. Sam, thank you so much, man. It was a pleasure getting to know you. Your story's incredible, and keep inspiring and teaching others. It's your paying it forward, man. We love it.
Awesome. Appreciate it, guys. Love it. Keep it up.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.